Well, good morning, everyone. Thank you so much for coming. I'll be talking about AI-first insurance and opportunities and challenges it introduces to the industry of insurance. In an interview at Davos last year, Sergey Brin, the co-founder of Google, mentioned that the fast developments in deep neural nets has been surprising him, despite him having a front row seat to the whole show. And he's not alone. Many scientists in the field who were actively doing research in that field couldn't see it coming at that pace. And it's evident, the excitement about the development is evident in the number of times terms related to AI is getting mentioned in corporate earning calls. Like, for example, here you see terms such as machine learning showing exponential growth in terms of how often they get mentioned in corporate earning calls. But of course, that creates a lot of room for many predictions about what AI can and cannot do in different industry verticals, including insurance. But of course, in my talk, I try to steer away from predicting the future of AI, because even people who were more genius and smart in the field made some of the mistakes in terms of their predictions. The famous one is Alan Turing, one of the brilliant minds of AI history. In his famous 1950 paper, talks about how he thinks the field of AI developing. And in part of the paper, he talks about, if I actually read from the paper, he said, "I should be surprised if more than 10 to the power of 9 bits was required for satisfactory playing of the imitation game." So this is the paper actually where Alan Turing introduces the imitation game, and he predicts 10 megabytes is what we need in terms of memory for computers to play the imitation game and have a satisfactory performance there. And the number comes from the size of Encyclopedia Britannica, volume 11. So basically, prediction is a tough game in terms of future of industry in light of AI, so we steer away from it, and most of the stuff we talk about is in light of what AI can do today and is almost predictable for the next few years. So one framework that might help talk about the developments of AI in various industry verticals is the one that comes from the book Prediction Machines by Ajay Agrawal and co-authors. What they argue is that the cost of prediction has dropped significantly in the past few decades. So basically today we see prediction happening very cheaply and at a very low cost. And they argue that as a result of this, what we are going to see is that many industries will try to rethink and reimagine their industry to benefit from this cheap economy. So for instance, he argues a similar thing happened in photography. So photography was a chemistry problem, and computing became so available, so cheap, then that turned photography from a chemistry problem into a computing problem. Now we've got photography devices on our mobile phones and various computing devices. So he says that on the same type of trend, you're going to see, for example, HR was a human problem. Now it's becoming an AI prediction problem. Driving was a human expertise and experience problem, is becoming a prediction problem. And the list continues. As you saw from the previous panel, cybersecurity was a heavy computer science, computer skill set problem. Drug Trace basically is saying they made it a prediction problem. And fraud, as Hussein from Amphita was saying, used to be a huge amount of human looking at people in the bank kind of problem, and now has become an AI and prediction problem. So then, what does that mean for insurance? Well, the good news for the industry is that insurance was a prediction problem centuries ago. In 1744, two ministers from Church of Scotland observed the problem they had, which was after the clergyman died, their family was left alone in need of some financial support. So they thought it would be great if they create a fund where different clergymen contribute a small amount to the fund, and as a result of that, that provides the money to support the families that are left behind after their death. And that became the foundation of what we know today as life insurance. And in order to solve for that problem, they approached a professor at the University of Edinburgh. And the three of them together started thinking about how to solve this problem, and they used what is known as Bernoulli's law of large numbers to build a model of how mortality is going to develop over time in a portfolio of people who might or might not die at some point in the soon future. And if you think about it, like if you use a simple example of a coin toss, what Bernoulli's law says is that for each toss of a coin, it's very difficult to predict, is it going to be head or tail? But if you have 100 coin tosses, you can estimate how many of them are going to be head, how many of them are going to be tail, but it's very difficult to say exactly which one of them is head and tail. So the old paradigm of insurance was that I have a portfolio of risks. At a portfolio level, I want to know what the risk is like. So therefore, insurance started to become a prediction problem, but still doesn't mean it cannot benefit from AI. There is no opportunity for rethinking and reimagining what AI can do. To explain it a little bit clearly, one way to think about insurance today is that of every dollar an insurance company makes, like if you look at a recent report by Swiss Re in commercial insurance, somewhere around 50 cents of that premium dollar they make is paid back as loss ratio, basically to pay for people who make claims. And slightly more than 20 cents of that dollar is spent on acquiring customers, and whatever is left, somewhere around 20 cents, is going to be split between internal operation costs and underwriting profit. So today, the part of this value chain that has been historically using prediction is mostly around estimating what that loss ratio is. A huge part of it is there. And of course, related to the reserving and other concepts as well, there's a huge amount of prediction going on. And I think if you see at the top as well, another thing insurance companies do is that they also add more to the dollar through investing that asset they earn through premiums in different asset classes. So that's the kind of framework that insurance is built on today. And then if you go back to the coin toss example, what happened in light of all these prediction became cheaper? A few other things also happened, which is predictions are broadly available. So in a way, things that we could not predict in the past seem to be predictable now. So in a way, it's almost like not only we can predict on 100 coin toss how many of them are going to be head or tail, but also we almost can predict right now for each coin toss, is it a head or tail? Not only that, but in a lot of sciences that is related to the risk that we are insuring, like in medicine, in cyber sciences, and so on, we also have the science that could be paired with a precise prediction to lead to prevention. So all these things together, I think, are still new opportunities for insurers to start to benefit from. And in light of that, I think we could envision a future in insurance where, through better use of AI, you could drive the loss ratio down, you could improve the acquisition ratio cost, and internal operation, similarly, is likely to go down. And that leads to a higher margin and insurance profit. And also, similarly, the world of investment that insurance are operating in is full of complex data and complex decision-making, which again, could benefit from this new economy of prediction. So therefore, the future world of insurance could lead to a higher margin, which could lead to more innovation. And that could result in magnificent impact in the society. So let me give a couple of examples. You saw dark trace earlier. So imagine if somebody is insuring for cybersecurity, a portfolio of clients. Historically, it's been about, can we estimate the amount of claim that is going to come from that portfolio? Now, in light of technologies like the one that Darktrace introduced, you can actually mitigate some of these risks. Through the prediction machines that you have, you can predict that this pattern of behavior in the network is risky, therefore we can stop it from happening, and so on. So I think these are the kind of stuff that could drive the loss ratio down. So that's what I think is an opportunity that traditionally, when people think about prediction and insurance, they think about actuarial science and reserving and pricing, whereas I think that's a very interesting emerging opportunity in light of the new economy of prediction. But of course, it's not simple. It's a very challenging process because a lot of the time you hear companies that say, oh, we are the good old-fashioned company that we used to be. We have got a few apps. We've got a few neural nets. Therefore, we are AI first. But it's not really that. It's a lot more complex than that. It requires a fundamental rethink and reimagination of the business to truly benefit from AI. One way to explain it maybe is the autonomous vehicles. Usually you see the pilot phases of autonomous vehicles where there is a car like this red one here that has been built pre-AI. The car looks just like a normal car that we are used to in the past few decades. And then they thought, oh, autonomy is an interesting thing. Why don't we put a bunch of cameras around the car, on top of the car, and so on, so we can eventually see if this car can drive autonomously. The problem is, imagine if autonomy works. What's the implication for that company? They need to go through a fundamental rebuild of their manufacturing line, because now it means redo the process of manufacturing and everything, because you need to build a car that this camera and these sensors are embedded within it. So it's almost like multiplying the cost of like two phases of cost to get to the ultimate autonomy goal. Whereas what Tesla did is slightly different. So in Tesla, when you look at the Tesla built in 2014, 15, 16, and so on, you don't see any sort of cameras hanging around the car or something, because day one they thought autonomy is inevitable. It's more a question of if, it's more a question of when rather than a question of if. So therefore, from day one, they built the car with that in mind. So the car comes equipped with all the sensors and so on that you might possibly need to achieve all the way to level 5 autonomy. And then later, recently, you saw that Tesla released a software update that made the car autonomous. And that's the essence of designing based on AI. If you have the good imagination of where AI can take your industry, you can build the car from day one that way. So that brings us to the world of AI-first digital transformation. A term, digital transformation, is a term that many industries are talking about today. But I think AI-first digital transformation is fundamentally about the result of reimagining every touch point and hence the overall business model in light of machine learning's ability to inform and assist the users and the customers and employees of a business. I think that's where the true north is. So if your company is going through a digital transformation, it's a good time to think about it. Do you want to have a no AI digital transformation and put those cameras on top of it later and create a second cost when that shows some level of success? Or you want to start from now rethinking and reimagining that process? I think that's a good question for insurance industry as a whole to think about. But again, as I said, it's not easy. It's going to create a few challenges for the industry. The first one is talent. I mean, I like this famous quote that I say here and there every now and then, which is, talent can hit a target no one can hit, and genius hits a target no one can see. And I think it's very important for insurers as well as many other industries to invest in talent, because without talent, everything else stays a theory and you just become good at buying services from vendors. The second thing is the strategic data acquisition. I mean, Google is a fascinating story in a sense that for a decade, they've been collecting so many data sets from so many users that eventually, through a huge amount of diverse data, we started to see that the old algorithms, that the theory of it existed decades ago, started to work. And that shows the power of data. Without data, how can you build machine intelligence? And I think that's a very important thing for insurers as well to be mindful of. And the third one is, of course, the concept of A/B testing and fast decision cycles. When your ecosystem goes digital, you need to be able to test a lot of things quite fast. And that's where it becomes very important to have clear KPIs of what better version of this feature means. And through that KPIs, you could quickly test scenario A, scenario B, and pick your winner one and continue to improve the system incrementally that way. And also, given that you're going to have so many of these tests, you cannot ask the CEO every time for permission for, oh, we want to move the logo of the app here. Can we get approval for this? And that's the reason you see in a lot of internet companies, there's a huge amount of push towards power going down to the PMs and engineers. Because instead of a business with so many strategic big decisions, you end up having a digital business with many small decisions happening very fast, very frequently. That requires more trust, more power shift to engineers and PMs. And these are the four things that I think the industry needs to invest in. Maybe I should have started with this slide, but actually now is a good time to maybe describe what insurance is. So insurance, in essence, is the business of transferring risk to its optimal owner. Now, in light of AI and various scientific developments that we are seeing, how can we define the optimal owner of the risk? Maybe I should elaborate a little bit more. In the world of general insurance right now, there are estimates that are saying there is somewhere around $10 trillion of risk out there. And if you look at the size of premium in the insurance industry, we covered so far around 1 trillion of it. So there's 9 trillion of risk out there that exists, that people are experiencing, but there is no formal insurance coverage of that. So the question is, who's the optimal owner of that risk? Can AI help the current insurers to become better at owning these risks and be happy to have the risk transferred to them? Another area which is very interesting, now I'm kind of going a little bit to my Oxford role, but again, with an insurance in mind. Today, if you look at the global spend on healthcare, it's somewhere around 10 trillion. This is not estimated, this is like really what the money we are spending today in healthcare. And that's almost 10% of the global GDP. And various players in the healthcare ecosystem are built based on certain view of the world. And I'm going to just share a couple of examples of how these views are being challenged. But the list can continue. It's a much bigger list. One example is we are fundamentally seeing different patients. If if you look at the trend in medicine right now, in the past few decades, now we have more people living into their 60s and older than those who died before their 60s. And that's good news. I mean, that's a moment that medical science should feel proud, but at the same time, it introduces a fundamentally different challenge to the world of medicine. So here is a paper that came out of our lab last year, which shows basically, just look at the red line with 5+. So what it said, we looked at 5.5 million people, patients in NHS, and we looked at the time at which they have their first incidence of a cardiovascular disease, like a stroke or something like that. And at that point, we counted other diseases they had. If you look at the x-axis is showing between 2000 all the way to 2014. So in the past 15 years almost, what we see is that there is a 4x increase in the number of other diseases people have when they get their first cardiovascular disease. Is it the same patient? If your underwriting manual is from 15 years ago, are you really talking about the same patients anymore? It's different demographics. People are living older. When people are older, they are fundamentally a different patient. And that's very important for medical science as well as the insurance industry, as well as other players in the industry to be mindful of. The second thing is this notion of alternative data in healthcare that is becoming more and more successful in showing pathways for impact. There is a recent paper out of Imperial that have been basically saying, if you tell me roughly your postcode, I could go look at the images of your street through Google Maps, for example, and try to see if I can predict things about your health as well as other things. And this shows the amount of correlation. You see almost 80% correlation in the graph that is trying to look at the pictures of your neighborhood, not even in front of your window, just roughly your neighborhood pictures, and can that picture be predictive of your health deprivation and disability? It's a shocking result, and that's actually a London example here, but they tested the results in Birmingham and Manchester and a few other cities, and it actually holds up quite nicely. So what it means is that your medical data is not just about your MRI images, or it's not just about your genetics data, or it's just not about your blood test. It's much more complex than that, and that's where I think a lot of the existing assumptions about medicine will be challenged. And I'm not sure how visible this chart is, but basically what it shows here is a list of FDA-approved AI in medicine. And the list, you see from here almost, we are in 2018, all the way to almost now. And the pace of number of AI, FDA-approved AIs for various parts of medical value chain is increasing dramatically. And it seems to be working quite nicely that FDA is happy for these things to be released into practice. And they cover ranges of medical practices, psychiatry, ophthalmology, and radiology, neurology, everything. There's a huge range of disciplines that are being impacted by these AIs. And I think that's where fundamentally we are seeing that in medicine, there is a high chance that we are moving from, like if you think about what insurance in medicine was, it was about predict the likelihood of a risk and then pay for the claim when it comes. In light of a new prediction economy, it seems to be moving more and more towards predict the likelihood of a risk, try to prevent, and make that prediction personal and try to prevent at a personalized level. And that's, I think, the transformation we seem to see. And in light of that, I hope that you leave this talk with one question that you try to answer, which is, after all we see and a lot more that is out there that I didn't get a chance to talk about, who is the optimal owner of the medical risk? And of course, the same questions apply to many other domains of insurance. With that, I thank you for your time and coming to this talk. And all right.
Thank you. Thanks very much, Reza. So, hello, everyone. That's very interesting, isn't it, to get that kind of very specialist analysis of business models and also that health insurance angle. We're now with this brilliantly mixed and diverse panel in terms of their experience and what their history is and what their jobs are today. You can see, I'm not going to waste any time by saying what you can actually read. We're going to now dig into the nitty-gritty of what it is to actually think about and implement the right kinds of changes using AI technologies in actual insurance companies with actual customers. And actually, the customer is going to join this discussion as well, because that's going to be one of the focuses of our discussion. So very briefly then, Orlando, to my far right, Chief Data Scientist at Aviva. Okay, I've just broken my promise about not saying what you can read. Orlando's got some really interesting experience, actually, which is going to come out in this panel shortly. But I was really impressed by the fact he was in King's Cross 25 years ago, enjoying the social scene, when I was hurrying from point A to B with my head down. Next to him is Ashish. Now, I actually just referred to Ashish, to his face, as the Che Guevara of AI and insurance. And he seems to be quite happy with that, actually. So you can make up your own mind when you hear him. Next to him is Emma. And Emma's looking at me like that because she knows I'm going to say she was really impressed that Orlando Bloom was here last night. And actually, I was quite impressed as well. I didn't see him, though. And right next to me is Electra, all about user-centric approach to the law and a big focus on privacy, bias, and the health of the whole ecosystem, especially the end customer. Now, what you've got here is a panel of people who are actually, although two of them have big jobs in big insurance companies, are actually outsiders working from the outside in. That's a really important perspective. And actually, with Emma and Electra, you also have some people who are deeply interested in insurance, but who are also looking at us and you from the outside. So what the guys are going to do is they're going to take a couple of minutes first. What I asked them to do was to pick one thing of the many things that they could talk about that they're doing now to change the status quo and why they think it matters in relation to this bigger topic, okay? So we're going to start with Orlando. So Ashish, would you give... Okay, yeah, Orlando.
Morning, everyone. How are we doing today? Good? Yes, so one thing that's difficult. So some of you might know Aviva. You're probably familiar with the brand. You might not know that we were founded in 1696. So we're an extremely old company. So Reza was talking about prediction, and in the 1700s it becoming a big problem. We were there at the very start. So prediction has always been part of the Aviva business. For the last few years, Aviva within the industry has become known for, again, some of the things that Reza's been talking about: digital transformation, disruption, the fact that we've shifted loads of people to Hoxton. We own lots of Hoxton Square in Shoreditch. We've also invested in talent. These are kind of new skills: digital marketing, data science, machine learning, at scale. But really, the important thing has been about customers for us. Because customers, we know, don't trust insurers. Insurance has become it has got a very corporate perception amongst customers, and people think that customers aren't loyal to insurers, and customers think that we rip them off. And we've tried to actually fall in love with our purpose again, because to us, it's not about ripping customers off. Insurance should be about protecting the things that customers find most valuable at some of their toughest times. And so if we think about where we're driving customer value and customer outcomes, we don't expect customers to know or care about machine learning, artificial intelligence, digital disruption. We do expect them to care about the fact that we don't penalize them at renewal by putting prices up. We're trying to streamline the claims process. We're trying to take the time it takes to underwrite people down from 4 weeks down to 3 seconds. Those are the things that we are using AI and machine learning to do. And it's all centered around trying to drive value from customers. So that's the big thing for me.
So falling in love with the purpose. I like that. Ashish?
Hi. So I work for AXA XL, which is the commercial and specialty division of AXA. And so we have sort of big risks around commercial insurance, but also catastrophe risks, or hurricanes, wildfires. The kind of risk that touches a lot of industries, countries, big populations. And quantifying and really understanding that risk is hard. We're also, at the same time, looking at the nature of evolving business models. So we have shared economy, we have gig economy, we have, there was conversations about evolving cyber risk and the whole connected nature of risk. We talk about smart cities. All of these, while really exciting propositions, also create an environment of really complex risk, which is hard to understand. And what we're trying to do is trying to sort of fundamentally change our ability to learn and improve the risk posture, understanding a risk posture, and what does risk really mean in these situations. And by monitoring and working very closely with our clients, to Orlando's point, we're able to then create mitigating strategies and ways of working in partnership with the clients. So use of technology and data to then drive a better understanding and helping manage risk is where we're moving away from the very transactional nature of just paying for a cover to then helping manage and monitor and be partner with the clients. That's where we are.
So I lead marketing at a technology company called Cytora, and we're focused on helping commercial insurers to transform the accuracy and efficiency of their underwriting using artificial intelligence. And I wanted to start off by giving our definition of what artificial intelligence means to us, because I'm aware that it's a very loaded term. But at Cytora, the way that we define AI is it's the computer having an ability to make a prediction based on finding patterns in data. And at Cytora, we make a lot of predictions. We make predictions about, will this building catch fire? And if it does catch fire, how much will the claim cost? And we serve these predictions up to underwriters to help them make really fast, better informed decisions about the risks that they are underwriting. And I think the problem that we're really solving here is we're making underwriting a lot more efficient. So today, if you want to buy car insurance or travel insurance, you can purchase this in a matter of minutes. But if you want to buy business insurance, that could take up to 7 days. And this means that the customer experience isn't great. And this is because the underwriting process itself in commercial insurance today is still extremely manual. So underwriters are spending up to 50% of their time actually going out and gathering information and assembling data sets and then trying to analyze the risk based off that. What we want to do at Cytora is serve them up these predictions so that they can make really fast, accurate decisions. And that's really great because it means the customer gets a better experience, they get a fairer price, and it actually reduces the cost of delivering insurance for the insurance company. So that's kind of what we're focused on at Cytora, is really making risk transfer a lot more effortless, making insurance a lot more easier to obtain for businesses, and that's what we're working on.
Hi everyone, I'm Electra. I'm the founder of The Law Boutique, and I founded The Law Boutique in 2017 after spending 10 years in large organizations and witnessing the inefficiencies of the legal industry. So we focus on startups, mainly tech startups that are very fast growing, and the main focus is actually data. And how do we create the companies of the future that are really taking data ethics seriously and ensuring that they're doing their bit for society in the future? So data ethics is the new sustainability and corporate responsibility, I think. So our focus is very much on making sure that these companies understand that, what the commercial implication of that is, and also how they need to be responsible in the future.
Great, thanks very much. So the first question then, and we're going to go to the outside, the true outsiders first, Ashish and Orlando, so a little bit of patience. My first question is, right, from your different perspectives, we'll start with you, Emma, in a second. Okay, we talk endlessly in insurance about the challenges that we face in not just understanding technologies, but working out how this changes what we do and how we do it and why we do it. Just share a couple of examples from your perspective of educating and selling stuff to insurers, right? Of what you see in terms of how people are thinking about this and what they're actually doing about it.
Yeah, so I think one of the biggest challenges that we face at Cytora is, especially from a marketing perspective, is we're asking people to really trust a technology that they're not very familiar with to guide their decision making. And that's quite a scary thing for some people. And that's definitely a big challenge that we have to overcome. And our marketing team spends a lot of time thinking about how we can build a brand and how we can position a product that people will feel confident and comfortable using and that people trust. And for us, it's we focus a lot on transparency. So explaining exactly how our products work and when they perform really well and when the AI doesn't actually perform very well. So a really good example of this is in the SME market, the AI performs really well because there's a lot of data available for us to use to understand those risks. Whereas at the larger, more complex end of the market, the aid doesn't perform as well because those risks are harder to assess and there's not as much information available. So we're super transparent with customers about what we can and can't do, and that definitely helps to build trust.
Thank you. So we'll come back to the issue of how much data is enough data, hopefully, if we have enough time. Okay, so Electra then, from your perspective, looking in at insurance, challenges and opportunities, I'm guessing you're going to want to talk about privacy, but go for it.
Yeah, so I think there are some existing issues, namely GDPR, which is probably not everyone's favourite word, but my question is it actually a legislation that's already outdated in light of the technological developments currently? And are you able to build a truly GDPR-compliant AI system or blockchain or anything that's so innovative with GDPR in mind and privacy by design in mind?
Okay, so Ashish, you're holding the mic. So you can obviously pick out some challenges and opportunities from your perspective as well, or pick up one of the things that Emma or Electra has said about, you're in an insurance company trying to make this big change, challenges and opportunities from your perspective.
Yeah, so I'm nearly 2 years into the company, but also being relatively new to the insurance industry. And as an outsider coming in, and also to some extent as an academic coming in, there's a lot of conversations that I have which don't talk about technology. It's more about demystifying the whole world of what does emerging technology mean, what is its adoption, and what is that thing that you can grab and actually work with to drive a product out in the market, a conversation that really helps people understand. And I think that first step is very much in helping the business articulate the challenges or the opportunities that we're really trying to explore. Getting from there to the actual launch or running an experiment is the bit where I think we were getting hopefully a little bit better at. But I find the challenge of helping take that conversation from why would we want to do it, what's in it, and why shake the status quo of how things are working. And I think insurance is now seeing the concepts of things which are, again, pervasive in other industries like design thinking and so on, now coming in and creeping in, and they're getting quite excited about that.
So what do you think is making the change then? I mean, is it partly you, right? Or what are the drivers to unlock people's minds, right?
Well, there's a level of maturity that the industry is going through. So there's always that kind of bootstrapping period where there's a lot of noise and a lot of things happening. Nobody quite knows exactly what will stick, what will not. And there's that whole, again, we live in a world of uncertainty, and there is that uncertainty of, is this technology really where we put our money into? Is this what is going to be the next big thing? And I don't think you need an answer for that. What you need to do is be quite open-minded and run a whole bunch of experiments and work with, have skin in the game to really understand what does this really mean in the context of applied outcomes.
Okay.
And driving that, I think, is where the industry is now maturing to a point where we're raising the bar across the market.
So we're going to come back and talk, hopefully, a little bit more about that in a moment. So, Orlando, what do you see?
I think one of the things that's very clear when you move into the insurance industry is that the amount of technical legacy is way beyond, I think, other people's expectations. So I've been at Aviva for 2.5 years. I was at Money Supermarket before that. And when I left Money Supermarket in 2016, we were in the process of replacing our legacy database. And the legacy database had been switched on in 2012. And I've joined Aviva, and we actually have operational systems that are 50 years old, 50. And I think when I talk to startups about that, they think I'm exaggerating. And when I talk to other people within the financial services industry, they join me nodding and maybe sobbing. Because it's really tough. And I think when I heard Reza talking, I think it was great that he talked about talent, he talked about acquiring data, he talked about A/B testing, and he talked about engineering. I think on top of that, there's a real challenge around tackling technical legacy head on. Because AI, machine learning, these things are powered by data. And I think without really investing in the data engineering challenges, I think people will always be left behind.
So that tech legacy, I mean, I've been in the insurance market since 2008. People were talking about that then. I remember sitting opposite a CEO saying, I'm heartily sick of hearing about us needing to change our legacy systems. He's not a CEO anymore. So what's going to be, what practically can you do about that, given that this has been, you know, a board topic for the entire time I've been in insurance, and I'm sure for years before that, Orlando? Any thoughts?
I think in practice this involves typically building layers of data that are a bit more contemporary over the top of existing policy admin systems. I think there's going to have to come a time where people actually look to reinvent some of the back end of insurance, which still hasn't really happened at any kind of scale. But I think it will have to at some point. I think to Electra's point, I think GDPR kind of helps in a way, because requiring you to have audit trails of customer data, requiring you to be able to delete customer data, these things fundamentally mean that you have to understand where the same customer sits across multiple databases. And so I think it kind of forces the issue, so I think it's helpful.
Yeah. Okay, thank you. At this point, any questions, observations from you? Because you're part of this conversation too. We'd like you to be. So, yes. I daren't jump, but if you want to come and get the microphone. Oh, no. They're on their way.
Thank you for a very insightful talk and sharing your experiences. Given what you said, is it the technology companies who will make the more efficient and effective insurers of the future?
Who wants to take that?
Okay.
Yeah, go for it.
Well, I think in practice, the places that consumers buy products and services for are driven by consumers themselves. And I think insurance is a difficult market to break into. It's very highly regulated. I think there's a lot of kind of drags, a structural drag in the system, which means it's not always a great industry to break into, but it could be a great industry if you're an established player, because you've got the customers, you've got the data, you've got the products. And given that a lot of the data that certainly we hold is, these are things that we know about customers and we can learn about them that are very difficult for other people to learn about. So we kind of think that we've got an advantage there, a competitive advantage, and it's potentially quite a difficult thing to break into. I think, that said, some of the components of the insurance process are very easy to be disrupted by a technology provider. And I think partnering with technology companies is going to be the way that a lot of people go.
Okay. The other hand over here. Can you shout? Go for it.
So what would the insurance industry be doing better with the war for AI talent?
So getting better at getting talent. Is that what you mean? Yeah?
So there's a war for AI talent at the moment. The industry sector is perhaps seen as a little bit stale, a little bit...
You're being kind, aren't you?
So just keen to hear what you guys think the industry should be doing.
Okay. So, Ashish, you're ready?
Yeah. So it's hard. It isn't the sexiest industry where people want to come and work as data scientists and engineers. I think the insurance industry hasn't articulated the challenges and the opportunities that the industry can bring to the more sort of the academics or the people who are really looking for a big challenge. And if I were to sit down and really talk about some of the things that I look at now from sitting within the industry, I would say that these are really complex problems to solve, and there isn't a right answer, but there's a whole path of exploration and discovery. So we need to be more outspoken about how do we present the opportunity for people to come and work in the industry and be excited about it and feel that they're challenged and they're learning something, and then rolling out products and services in the market and so on. So the onus is very much on us to try and talk more about that. And I think, again, reflecting back on the conference as a whole, these 3 days, you have a whole diverse set of people who come and listen to these talks, and they take those reflections away. But I think the conversations I've had more one-to-one is been about how do I come and learn a little bit more about the insurance challenges, and what is it that you're trying to do in understanding autonomy, or how do you look at catastrophe risk, or how do you model hurricanes and climate, and how can we participate in? So there's an element of that people want to be connected to some kind of the purpose-driven side of things, because insurance does touch everything. And I think talent can come and really make a big difference to the industry. So working with academics to try and bring in talent, but also appealing to the market in other sectors where people move in. And I come out from a different industry, and I'm really excited to be here.
So in our pre-chat, Orlando was saying, Electra, when he learned that you were a tech lawyer and the kind of things that you were interested in, he said, we've got loads of M&A lawyers as a mature insurer, but we don't have enough people like you. So what would it take to get people like you into insurance?
I think it probably needs a rebrand. I think it needs to get sexier, because at the moment it's just not. But if you bring in the tech element to it and the impact that AI could have, and you make that more known, then that could probably attract more talent.
All right, well, I think that leads us on to our next question, actually, which we wanted to talk about data ethics and ethical design, and all of those driving better customer outcomes issues. So, Orlando, I'm going to come back to you, actually. When we had a chat, you were very eloquent about, because I challenged you a little bit, didn't I, off stage, about really dual pricing, loyalty penalties, all of that good stuff, and does the Aviva Drive app really make a difference? And you had lots to say about what you and Aviva are doing to really drive better customer outcomes with an ethical design framework in mind. Do you want to share a little bit about that?
Yeah, I think there are a couple of things. I think on the issue of pricing and the fact that we've historically charged loyal customers more than new customers. I think people who work within the insurance industry understand what's happened there. I think people, price comparison sites, amongst other businesses, have driven the cost of insurance down to the fact that if you want to compete for your first year customer, if you want to attract a customer, you need to charge pretty much less than it costs to actually have run the policy. And so recouping that money in later years has become the way that it works. And I think our way through that is to use data science and machine learning and AI actually to think about capitalizing on our data asset. How do we win customers for the long term? How do we make sure that we're cross-selling to customers? How are we actually doing things that are about engaging with people? And then we think we don't have to fall into that trap. So we've launched new products that don't have that feature. We won't be charging you more than existing customers. But I think there's a much broader question around the ethical use of data there. And I think for insurers have been pretty bad at writing down the principles by which they operate. And that's probably not just true for insurers, but it is specifically true with such a data-driven industry. And what the public debate about data ethics is actually forcing the industry to do is write down some of these principles and make sure that we can hold ourselves to account. And I think one of the nice things about algorithms is that ultimately they are auditable, and people talk about black boxes and people talk about neural networks and the fact that these are difficult to understand. Ultimately, there are formulas there, and they are auditable in a way that's far beyond the auditing capability of a human, the ultimate black box machine. And I think, historically we've made judgments that have been very, very ad hoc, without the ability to actually understand the process by which those decisions have been made. And our debate about data ethics is forcing us to write down and stick to those principles, which are far deeper than just pricing decisions about a specific product.
So obviously I'm not going to ask you details about the insides of Aviva, but in general terms, matching up that, yes, we need to capture our principles and make sure that our principles stand up from a compliance regulatory, from a purpose-driven, but also from a profit-orientated point of view. Just a couple of maybe questions, not what you've been doing and the answers that you've had, but some of the thought process about how you as an organisation are thinking those complications, if you want to put it like that, through. Orlando, are you happy to do that?
I think if you get to the fundamental operation of an insurance business, it's kind of all about getting the balance right between pooling risk and getting people to contribute in terms of price in proportion to the risk that they add to the pool. And trying to understand that that trade-off is an ethical question. It's actually trying to say, how far do we want to go in terms of pooling risk? Where does it become wrong in some way? How far do we want to go in terms of getting people to pay in proportion to their price? When do they become uninsurable? And so we have a data ethics forum which is sponsored by our group exec team. We're also partnering with Cambridge University, because what we don't want is a situation where we're just marking our own homework. We're just deciding ourselves that this is ethical and then we're doing it. So I think it's very important, firstly, to have executive sponsorship. And then secondly, I think it's very important to get some kind of third party who's typically, and the people that we're working with at Cambridge are not machine learning people, they're not AI people. These are ethicists and people that are helping us with the ethical discussions around what we're doing fundamentally.
Great. Ashish, coming to you then.
Yeah, so I completely agree with that, and I'll add on to it by saying that it's not something, we cannot think about ethics in a silo. It is something that needs to be out there in conversation and being discussed in forums about what is it that you really mean by ethics in the very first place, but also how do you as a company be more responsible in adoption and implementation of technology. So we need to understand how technology works. We need to be able to explain that, and we need to be quite transparent about how we're using the data, how it's being ingested in technology, and what is actually part of the products and the services we are reaching out to our customers with. There is a technology or a demystification element to it, but there is also a very important element where we need to educate and work together with universities and ethicists and academics and government in its adoption.
Something fell over, but we're still here, so that's okay. Emma, we were talking before about the kinds of questions that your customers ask you about. I'm going to hand this to you in a sec. About that black box and the questions that they have around that. Are you interested, heartened? It's just another bit of the conversation to get to a sell. What's your viewpoint as Cytora?
Yeah, I mean, we're very interested. We spend a lot of time thinking about explainability. It's kind of one of the things you really have to provide if you're providing someone with a prediction and you're expecting them to make a decision about what they're going to do next. Based on that prediction, you have to explain how you arrived at that prediction. And so we spend a lot of time thinking about how we can build explainability into our models. And we actually have a feature called Key Drivers, which basically breaks down how we arrived at a specific prediction. So it might be things like, how tall is the building? What is this building used for? Maybe it's a fireworks factory. What's located next to the building? And we provide these key drivers every time we provide a prediction so people can actually understand where it's coming from. And that's something that's really, really important.
So Electra, you're sitting here listening to this. How are you feeling about it? What response would you make?
I think we need more law, actually, which is probably an unpopular viewpoint, but I think we need a GDPR point too, without all the privacy policies into your inbox. I think we need a focus on how this is going to work in practice. I don't think the GDPR was done in that way, and I think that we now need to look at it slightly differently and from a more pragmatic point of view.
So more law, a couple of examples of that, what that actually looks like maybe, or just one example for you?
I think we need to think about how we create these products and how it's great that Aviva has the capacity and the resource to have these data ethics groups, but what about the tech startups that don't have that? How do they know what's right and what's wrong if they don't have a think tank? So it's more about guideline, and there is no black and white way to say this is how you need to do it because it's so new and because we haven't seen what it can do. But having a bit of guidance and an understanding of what the outcome needs to be, I think, is the right approach.
Yeah, and that's very much to your ecosystem point as well, isn't it, Ashish? What do you want to say?
Yeah, so chiming in on that, so we are part of these accelerator programs where there's a lot of startups that get selected as cohorts, up and coming, and really good propositions and so on. And we go to them as mentors to help them understand the world of insurance and be the subject matter experts, if you like. But quite often, and I think more often than not, we're actually being reverse mentored by those companies in understanding the use of that technology because they're far more forward thinking and are actually iterating on those products and services much quicker than we are able to understand them. So I do actually like the fact that when we have people from our company in the various business units going out and mentoring and helping these companies understand what does insurance mean in the context of that technology, they come back with this, this sparkle in their eye saying, actually, I learned a lot about technology. I didn't know that this kind of technology existed. So, and then the conversation becomes really interesting because they're working together to explore compliance, regulation, technology, adoption, and so on. And that's where I think is the sweet spot of that bidirectional flow of wisdom and education in some ways.
Okay. Coming back to you then. Any questions, observations? Yes. Do you mind shouting? She'll get to you, but if you start shouting.
Reza spoke about the declining cost of predictions, and I think what probably accompanies it is increasing prediction accuracy. What have you got to say from an insurance perspective about non-insurance of some members of society as that prediction cost falls and the accuracy increases?
I'm not quite sure.
Yeah, for those who didn't hear the question was around as the cost of prediction declines and the accuracy of prediction increases, what do we have to say about uninsurable people that are maybe uninsurable because we can predict to such a high degree of accuracy that they are going to undergo some kind of claim event that we don't want to insure them. It's a big issue, and I think typically we see that it's less of an issue within general insurance, so within car insurance, home insurance, things where there's a lot more intrinsic risk that we think we're probably never going to predict. That actually it's less of an issue. I think where it is a big issue is life insurance, and in particular the use of genomic data for life insurance. And as an industry, our response has been essentially we've all agreed not to use genomic data on the whole for pricing. There are some exceptions, but on the whole we don't use genomic data to price people.
That's a voluntary thing though, right, Orlando?
Yeah, there are a few exceptions, but on the whole, I think that probably isn't going to be sustainable as an approach. I think we need to probably have an industry-wide approach, and we need to be, and there's a big role for a regulator there. I don't think individual insurers can make a call on that. I think it's an extremely important, very, very serious issue that I think requires industry-wide collaboration and regulator collaboration. There's an analogue in the flood examples. There's something called flood re. Essentially, some homes are at such a high risk of flooding that they were at risk of becoming uninsurable. And the industry response was essentially to join forces on that. So I think similar approaches for more predictable events in the future are likely to be the way to go.
Is that okay?
Can I quickly add to that?
Yeah, sure.
Sorry. So three things. I think one point that Orlando mentioned is how far is going too far to really understand the level of risk and what do you really need to use. The second point is understand there is this area of parametric insurance where you're actually using only a set of parameters, and anything that goes above or below a threshold, you get paid out. And that kind of insurance is, because of the increase in accuracy of the data and the ability to predict the power, you're able to create this much more frictionless products that are able to detect something which make insurance much easier.
Okay, so there are some wins on that predictability and using it more because of the lower costs. Okay, sorry, quickly, your question?
In relation to climate change, any further reflections on the insurer's role in data? Because you mentioned the models at the moment aren't very good. We know from climate scientists that these extreme events are only going to get sort of more extreme and more frequent, and that's really already challenging the insurance sector. So any reflections on the insurer's role in actually collecting that data, analysing that data, and using AI would be appreciated.
So I'm going to very briefly touch on that, and then I'm more than happy to discuss in more detail offline. So one program we've looked at, for example, and Chip Cunliffe spoke at the climate stage day before yesterday, which is that we funded about 25 years of deep ocean and coral reef research. And all of that data obviously resulted in a lot of academic research, publications, etc. And we're now trying to put a program together where we can try and look at the broader benefits of the data that was collected and the research that's been done. Again, in alignment with the SDG goals, but also other programs where we can collaborate together with governments and institutions. I think it is something which is becoming more, well, we also created something, we partnered with Google to use that research to create education programs for school children, and it's reached out to 5.5 million children, where we're taking education about climate, about ocean, about coral reefs, straight into the classroom. And I think that's another way of using the data to create an education program, which I think is incredibly compelling. So it isn't always about the AI, but certainly we can use technology as a means of education and imparting back to...
There's a massive and long-standing set of data and analytical approaches, isn't there, for natural catastrophe, certainly in insurance and reinsurance.
Yes.
So is your question, are you going to let you use it? Is that the question as well? Right, so it's collaboration with, yeah. And a more structured, slightly more formal.
So
over to you, Ashish.
We fund a number of PhDs and a lot of academic research programs on a continuous basis.
So I know AXA XL and Aviva are busy doing things, but you're big, you're massive actually, aren't you, as individual companies? So I suppose maybe it's about insurance as a whole sector, somehow, as it did with Floodery, perhaps, just an idea to think about these big problems that clever people we know would want to solve. If only they knew us better, Ashish. There's something there to think about, isn't there? Okay, so we're coming into the last couple of minutes or so. So really wanted to just get your take, actually, as individuals. So Ashish, do you remember you said to me the important thing, and you mentioned it earlier, is just get started. I'm going to come to you first, Electra. If Ashish is saying to insurance, we should just get started with this, from your perspective as a tech lawyer, where do you think they should just get started? What does that look like? One idea.
That's a really difficult question. Yeah. I think consider the outcome. I always talk about outcome. Consider the outcome. How do you want this to look like? And then start from there, if that makes sense. Start from the end.
Yeah, I would say focus on identifying areas where you can really liberate humans from doing repetitive tasks that a machine could be doing, so that they can kind of focus on applying creative thinking to insights to really solve hard problems. So yeah, that's where I would start.
Orlando?
Yeah, I mean, I agree with just getting started. I think picking a product that is going to make the most of AI, that's going to deliver customer value, I think is really important, and then getting on and delivering it. And I think the where we've had some success at Aviva is actually we try to deliver these things at scale, but we don't pick the things that are that big. So we try to pick individual products, individual propositions, and then launch them at scale, because that allows you to break down any of the barriers along the way, and you learn a huge amount.
Yeah, can I just ask at that point, how much data is enough data in your view, Orlando? Because obviously specialist insurers in insurance don't necessarily have vast amounts of data. So how big does your big data need to be, do you think? I mean, Aviva's obviously mammalian, but...
It's an impossible question. I think it's totally down to the problem that you're trying to solve. I think all insurers will have different types of data. We've got 16 million customers in the UK. We've got 33 million globally. And we might, for some of these customers, we'll have several thousand data points, when you put it all together. But I think it's less about the size of the data, it's more about what you do with it, and it's kind of trying to pick the trends, trying to pick the insights, trying to separate the signal from the noise and hone in on the problem you're trying to solve and use just about enough data to solve that problem.
Okay, so we now have a helicopter to add to the noise. So let's finish off then. What I asked all our panelists to do, are you turning me up or am I shouting, was to think about, on panels, people really do want to give their best to you. So they think about what they're going to say, and we try and have a proper conversation, which I think we have had today. Hope you agree. But I'm really interested. I've asked these guys to do something slightly different as well, and a little bit difficult, is to pick one thing that someone else has said or a question that's been asked that's made them think, oh, I really need to look at that or think differently about that. So, Emma, as a marketer, you're used to listening to other people's thinking and thinking, oh yeah, I need to make a note of that. Has anyone said anything or sparked off any thoughts in you that's made you think slightly differently as to when you came and sat down here?
I guess not necessarily made me think differently, but something that I definitely that really resonated was when Orlando kind of mentioned that insurance isn't very trusted as an industry. And I think there's a lot of research that actually says people trust banks and retailers and healthcare providers more than they trust insurers. And I think that sparks a really interesting conversation around how can insurers kind of rebuild this trust with consumers, and how can technology like AI really enable them to improve the customer journey to build that trust.
It's something that Emma said actually about, and the word that she used, which is explainability. I really like that word because it's really simple and it's exactly what we mean when we say an audit trail. But that's right, transparency comes with explainability and being able to relay it in layman terms so people understand why you're giving them a price or why you're saying that their risk is higher. So I think that's a really interesting point.
I might cheat and pick a couple, but on explainability, I think the interesting thing is that it's a very hot topic, but within the AI and machine learning community, it's quite a controversial topic. There are some people that are very anti-explainability because it might reduce predictive power, whereas actually amongst consumers, explainability is typically what people want. So I think finding a way through that kind of dilemma, I think, is really, really important, and setting out principles is a way to do that. I'm going to pick the other thing around, we need more law. I think it's kind of unusual for a very highly regulated industry to say we need more law. I think one of the great things that regulators have done is started to upskill themselves in terms of hiring more people with technical specialisms. And I think that's extremely helpful. I think until we can get to real clarity of the law, helping people step into these kind of debates with some kind of technical depth is really, really important. And I think it's a good route towards getting more law, which is, I think, ultimately what we need.
Great. Ashish, what about you?
So, again, I think reflecting on the legal side, we work with a lot of startups, and clearly there's always issues of can we share our data outside, off-prem? And what does that look like? How do we, how careful do we need to be? Are we compliant with GDPR or not? And I think there's a growing need for the kind of enterprise technologies or technologies companies to focus on, well, what does this data sharing ecosystem look like, and how do we create privacy, security by design? There was a lot of conversation in the earlier panel around ensuring identity, ensuring privacy. All of those things are going to be harder and harder as we move forward. So we do need to rethink about, if you're talking about industrial IoT, IoT systems generating data, all of that coming into our environment or sitting on the cloud, we don't really have answers when we are moving into this world of multi-cloud, hybrid cloud, connected cloud environments. So we do need to rethink what does that really mean. And maybe it is GDPR 2.0 or something else. But yeah, that made me think.
Thank you very much. Okay, we're out of time. Thank you very much. I hope you enjoyed that, and please show your appreciation for the panelists.